Hello guys, welcome back to another Lumley trading video. In this one we are going to be doing some in-depth stock analysis over on AMC because it is down over 17% as we're recording this video. So right now we're sitting at 450. We got that 52-week low at around $3.70. So definitely heading towards it. Are we likely to hit it? And from a standard deviation perspective, yes we are. Because at $3 over on the 1 year, we have our statistical mean, and then also going down to around 250 is also our statistical mean, but this is over on the 6 month. So the way we use these levels or this statistical mean level is if it's within the area, I never look to trade because it is considered fair value. But what we do also expect to happen is if we bounce off a deviation, again, this is usually going to be that main target. So right now, because we bounced off that 750 deviation, a pullback and kind of a move to that $3 level is a high probability. So that's really what I'm waiting for. Again, this is why I wouldn't be something I'd be holding long, and that would be more my target. If we break that, I don't have any supports from a standard deviation perspective, so it will just be looking at the key psychological levels. So going low, obviously the $2, the 150, the $1 would be the key supports that I would be paying attention to. Now, if we do hit or start to move to the upside, what are key resistances? And really, this is what I would much prefer to be trading. And if I do trade AMC, these would be the levels I would be focusing more on. 750 and 870, these are our first deviations on both the 6 month and the 1 year. Again, the first time coming into this level really is looking for a pullback at the minimum. So again, coming into the 750, look to play that pullback. When we're in the money a bit, I tend to lock in some profits, move my stop to break even. If it continues down, obviously that's going to be that home run trade. We still got some size, looking to trade it really, locking in profits along the way, but final target going to be at statistical mean. If it ends up coming back to retest, and then obviously getting out break even on the rest, because then really anticipating a breakthrough if it comes to retest. And then again, we can play direction instead of a reversal by waiting for a breakthrough, come back to test it as a support, and if it can hold, then playing to that next deviation. Now the 750 and the 870 can definitely be levels to be looking to play just because we pull back so far from these levels, but until we hit $3, I wouldn't be looking at a full size trade because again, we have hit these levels already. So where I would be looking to get in a more size would be if we can get to these higher deviations. So we're looking at around $12.50, $14.30, and pushing up to around $17.50, $20, $22.50, and $25.70 as that final resistance. So again, really what we're looking at on AMC is it's not a stock I'm really looking to touch at all. Until we get some sort of a big movement. That's really the only time I touch these stocks. I don't play them long bias because again, they tend to, you just get really held and kind of locked in there, holding the bag, unless you kind of have obviously a set stop. But really the way I like to play these is coming into these deviations, just playing credit or debit spreads, and playing it through an options way, because again, I'm getting that defined risk, usually a 1-to-1 risk to reward, and I can say, you know, in a month's time it's going to be less than say $7.50, and you know, 9 times out of 10, if you're playing off these levels, you're going to be right. So that's really the way I trade this, and again, it's how I traded it really when it did that big move to around 35. Did the same thing on GameStop, and that's usually how I will continue to trade these small cap stocks into the future. Anyway, that is the breakdown on AMC. If you enjoyed the video, why not drop a like and subscribe and check out this analysis video.